And welcome to another brand new episode of FX Basics video. So this is going to be a different sort of a video today. We are going to talk about how we can actually approach the market. Basically, we'll be simulating, we'll be back testing the market in different conditions. We will also experience a random dates back testing. So we what are we going to do is we're going to select random dates from the Google. We'll actually back test that. So what we're going to do is first thing we are going into the Google here. Mr. Google. Let's just get into Google. Ba-bum, ba-ba-ba-ba-ba-ba-bum. All right. There we go. Getting in the Google here, and we will need a random dates generator. Random dates generator. Let's see. Let's see what we can do. Just give me a second. We need some random dates. And random work is good. It's good enough. And we need 5 days, so from Monday to Friday. We could backtest from 2018. So 2018 July, from July to, I would say July, August, September, October. All right, October 18, from July 18, 18th July 2018 to October 18, 2018. So we need Monday, Tuesday, Wednesday, Thursday, and Friday. We need a maximum selection of 6 dates. And let's get the dates here. Bang. All right, so the first date is to start with is 8 seconds. So 2nd of 8. So 8 is Jan, Feb, March, April, May, June, July, August. So August 2nd. That is the first date, right? August 2nd, and after that is the 6th of August. So what we do is we are back testing pound yen. So we are around 8, we are around 10 here. So what I'm going to do is I'll go into this so that I don't know what's happening. Dun, 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 dun. So we need to go to August. For now, we are in around the September. So August. Interesting. August. Dun, dun, dun. We are pretty close at this point in time. So pretty close. August. All right, so there we go. This is August 1st. So that's the first day of the August. So what do I need to do is we are starting with $5,375. So starting balance in the simulation session is going to be 5,375. All right, so this is in dollar, right? So our Swaggy T on YouTube says hello. Hello, Swaggy T. What's up? How is it going? Some of the people are surprised that we are on weekend as well. I mean, this is what you do on weekend, right? So basically, on weekends, you come to the market, to your terminal, and you try to backtest and simulate. So that could be helpful, right? Or go over your trades from the month or your session. So what I'm going to do is I'm going to fix the charts so that we can carry on. This is the random date we produced. So we went into the Google. So this is a nice spot to a nice site where you can produce random date. So this is the first date we're going to simulate around. So August 2nd of August, the first few days of the month. So pretty interesting. So what I'm going to do is I'm going to play some music at the same time so that the simulation is filled with energy, right? And I hope my audio on YouTube is fine. Let's see. So what we're going to do here is we're going to do this and fix the chart a little bit. fix the chart a little bit. Yep, this is better. All right, so we go here from weekly time frame. So we fix the chart at the beginning. All right, so we fix the chart, fix the chart, fix the chart, dun dun dun, fix the chart. Just simulating with MetaTrader, it is kind of little hard work because you have to repeat same steps several times. So I love charts when it's not like hard to navigate around, right? It's actually easy when the properties are like fixed. So when the scale is fixed, I love moving around the MetaTrader. Otherwise, MetaTrader is a pain in the ass. If you don't know how to use the MetaTrader, it's a pain in the ass, right? All right, so Kabir Singh on YouTube says, hello. Hey, Kabir, how's it going, mate? All right, so fixing. Fix the chart. 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 And this is all good. All right, let's see. We go here. Tan. This is 1 minute. We got 1 minute. We got 5 minute. We got 15. We got 30. 1 hour. 2 hour. We got 4 hour candles, we got daily, and we got weekly. So it's a nice way to start from the higher time frame to lower time frame. So we will try and break down the charts and see what's happening on a weekly sort of a time frame, right? So kind of need the left-hand side traffic here. So what I'm going to do is I'm going to keep this right here. So this is just a simulation software I'm using here. It is actually one of the really famous backtesting software out there. Interesting. So what I need is I need this session time as well at the same time, because I want to know what session I'm around, and I will be streaming. I will be streaming mostly around the New York session. So what I need to do is I need to back test the most volume time for me, or the most spectated time for me. That's going to be the pre-New York, New York Open, and the NYSE. That's basically my goal, right? So this is the 1st August. So we need to go to the 2nd of August. So this is the 2nd of August. Now, when breaking down the charts, it's quite interesting how weekly candles are looking at this point in time here in pound yen. So this is a pound yen support, possible support area on a weekly time frame. So I'm going to highlight this a little bit, and I'm going to consider that this is a support. So I have to clone this over to every other time frame. So weekly candle, look at this. Weekly candles are pushing down nice and slow, right? Pushing down nice and slow. Let me see if I can do this. Just give me a second, guys. Give me a second. Give me a second. All right, so look at the way the weekly candle is pushing down, right? So we pushed up for some time. There was a bullish trend. So we actually broke the trend and retested the trend. Now it's kind of making lower low and lower highs. It's making lower lows and lower high, low low, lower high, lower low, lower high, lower low, potential lower low, and it's going to make a lower high. Looking at the weekly time frame. So obviously the structure in weekly basis, or a weekly structure, takes more time to form than anything else. We obviously know this, right? So now look at this. If this is a weekly resistance, price has to respect that if it's falling down. And if this weekly support is breaking down, we do have a clear range on the left hand side. So pretty good. Weekly candle looks pretty good. So now what we need to do is go into the daily time frame and note down the closest daily and weekly daily rejection points. So what I'm going to do is I'm going to actually correct this level. So this support is corrected, that is updated, and on a daily sort of a time frame, this daily resistance is something important. Daily resistance is something important, And there is another level that the price has broken above. This daily resistance is something that price has recently broken above, and price closed bearish. Ooh, interesting, isn't it? Now for the daily candle, the daily structure to stay bearish, we have to see candle close below this gray area to start with, right? Obviously on a daily time frame, the view is a little different because the rejections are getting higher. Look at this rejection. Look at this rejection. Rejection is getting higher and higher, and this rejection is also higher. So, so for the candles in daily perspective to move up, kind of has to break the daily high and start to move up, right? Obviously, previous daily candle closed bearish, but above this broken resistance area. Now let's go into the 4-hour time frame and see what's happening in 4 hour here. 4-hour time frame. Oh, actually, let me clone this. Let me clone this guy here. Yep, that has been cloned. And if you look at the 4-hour time frame, this is the market gap time, or where the market is closed. This hour is where the market is closed. And obviously, it's going to be Asian session. So what I need to do is I need to forward the time, because I wouldn't be trading Asian and London. So I just need to make sure I forward to the time when it's New York session. So let's go into New York session. Dun, dun, dun. Not yet New York. Not yet New York. 10. All right, now this is 1 hour before the pre-New York, right? So what I'm going to do here is I will take it right here. Look at this. Now this is exactly pre-New York. 2 hours before the New York Bank open. 2 hours before the New York Bank open, this is where the pre-New York lies. And we usually experience a lot of volume around this time. Now, when I have to go back into the daily candle, look at this. Daily candle is pretty bearish. Previous daily candle closed bearish, making some sort of resistance. For the price to continue down, it has to break below this support. So if I have to adjust this support one more time, make it thinner and make it much more easier to view, look at this. If any of the daily candle or 4-hour candle to start with closes below the support, there is a chance that price can actually move in this clear range, and the range is 85 pips of range on the downside. So pretty interesting, isn't it? Pretty interesting. Previous 4-hour candle closed bearish, and this 4-hour candle is actually moving, and is also bearish. So this is a 4-hour support to, for example, this level right here. So 145, 685 is a support level right there. Dun, dun, dun. And price is rejecting off of that level. So if the price is moving down, nice and slow, making lower low, lower high, I need to see some sort of resistance in the lower time frame. So clear, right? Have to see some sort of resistance in lower time frame. So what do I do now? I go into smaller time frame, and all right, so there was a resistance formed before in a hourly time frame. So now for me to take a sell in a downtrend, I need to see another resistance, don't I? And this is obviously a pre-New York sort of a time where we obviously experience a lot of volume. So for now, the candles are retracing up, rejected the bottom price. I need to see a proper resistance. So I need to see a structure like this. Dun, 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 dun. So I need to see a lower high. Let's see what's gonna happen. So what we're gonna do is we're gonna forward the candles and also see if there's any news happening today. Ooh, looks like there is a high impact pound news today. Monetary policy. That's why it's rejecting and kind of ranging. So the monetary policy is happening in the next hour. Kind of interesting. Monetary policy is happening in the next hour on the 14, on the clock 14. So in the next hour. Interesting. So I usually stay away from high impact news, especially around monetary policy, official bank rates and stuff. So it looks like 2nd of August has turned out to be not so useful here. 2nd of August has turned out to be not so useful, but it's okay. We will still see how the market moves, right? Let's see. And this is the high impact news time. And they were expecting, all right, so the bank rate was, so they had really good bank rate. So positive bank rate. So previously it was 0.5 and the news at that time turned out to be 0.75%. All right. So Swaggy T on YouTube says, which software do you use to backtest? This is basically soft Forex. So if you search soft Forex on Google, you will see it. So one of the good apps to backtest. Obviously, it's not a live trading app. It's a backtesting app, right? Now let's see how the market's going to approach here. How the market's going to move. Ooh, look at this. This is the impact from the news event. And apparently Carney is speaking too. All right. So in the next 30 minutes, Carney is speaking. Quite interesting. I usually stay off of this sort of news event. Look at how volatile the news has made pound yen right now. It was moving down, so nice and consistent. Now it's rejecting off that 4-hour support, and it's quite volatile. So this is something you can backtest and note down, right? So for example, if you have a note pen and a notepad next to you, try and note down the stuffs we talk about here. Try and note down the stuffs we talk about here. So around the high volatile news such as monetary policy, bank rates, and whenever huge banks CEO, the larger banks CEO, they talk about monetary policy, about economical events, that's when the currency moves pretty volatile. And that's where you get massacred by the market. So if this is the news event time, I usually stay away from that news event time, and I come back to the market around the next volume time. So for me, New York Bank Open for now is just funny because I'm not going to trade it because there is monetary policy, too volatile. Look at the way the 30-minute and the 15-minute candles are looking, right? And you will see why I'm saying it's too volatile. Look at this. Look at the way the previous candles range side by side. Just ranging side by side, almost like nothing happened. And it started pushing up and rejected the top. Now it's just ranging. Now what I can do is, for example, if I go into the hourly time frame, let's go into the hourly time frame. Look at this. For any sort of clear buy, right? Any sort of clear buy. All right, now let's pause the market here. Pausing the market. For any sort of clear buy, I need to see candles. For example, on an hourly sort of a time frame, I need to see candles closing above 147.060, and there's a clear range on the upside, 36 pips on the upside. So this right here, this level right here, I would say 147.070. So let's clone this everywhere. So on an hourly time frame, if I could see a candle close above this area, I can clearly take buys. But for candles to show me some sort of selling signal, I have to see candles close below. I would say, this could be a target level right here. 144.960 sort of a level could be my target, and I need to see candles close below at least 145 to 295. All right, that's going to be my area right there for sell. So what I'm going to do is, now let's forward the time one more time. Let's forward the time, and it's pushing down nice and slow. Look at this. So 30-minute 1-hour candle is actually heading down nice and slow at this point in time, heading down nice and slow. So I need to see an hourly candle or a 30-minute candle close below this area. That way I can take sell, right? So let's see. Let's go to the 30-minute time frame. 30-minute time frame, pretty bearish at this point in time, near that daily weekly support. This gray area is a weekly support. Look at this. It's a weekly support area. Is a weekly support area, and the weekly candle has turned out to be bearish, rejecting all of this top range. So if prices in pound yen are finally moving down, the wick on the top of this weekly candle is beautiful, is actually beautiful. So let's see. Let's go here. let's go 30 minutes. All right, so now look at this. One 30-minute candle closed below that 145.296 is a good sign. It's actually a good sign for me to take sell. But now watch this. For a proper opportunity, I should be waiting for I should be waiting for a resistance like this to form. That way I can take a sell, right? Now we are 30 minutes in the New York session market already. Now what I'm going to do is I'm going to forward 15 more minutes and see what's happening. Chun, chun, chun. 15 more minutes. Oh, and it's retracing, which is a good sign. Retracement is a good sign. So let's see. Let's see. And this is the close of the previous hourly candle. So the previous hourly candle closed bearish, but rejecting the bottom range. There's a wick on the downside, and we are 1 hour in the market. So in the next 30 minutes, NYSE opens up. If you don't know what is NYSE, NYSE is the time 1 hour and 30 minutes after the New York Bank opened. That's where the stock exchange opens up, and that's when another cycle of volume comes in, or another volume is experienced around that time, right? So now let's see how New York Stock Exchange is actually going to move pounds price here. Let's see. 15 minute. Oh, retracing up, which is a good sign. One more time. I'm waiting for a proper resistance to form, so let's see what's going to happen. And this is the NYSE open time, 1 hour and 30 minutes after the New York Bank opened. Now I need to see a clear resistance. If a resistance is formed, that way I can take a sell. Until then, it's a no trade for me, right? So let's see. My bias is sell right now. My bias is sell. My bias hasn't changed yet. Let's go into the weekly time frame and see what's happening on a weekly. On a weekly time frame, what I can do is I can actually erase these targets. So operating on MetaTrader is actually kind of hard. To be honest, it's kind of hard on MetaTrader because you have to manually do a lot of stuff. Is not automated. So yeah, it's kind of hard work. MetaTrader is a hard work. So let's see. Let's look at the 4 hour. Our previous 4 hour candle obviously closed bearish. If this current 4 hour candle could actually make a top wick before moving down, that could be the sign that, you know what, liquidity grab on the upside is a potential move for the downside, right? So if the candle start to move down in its first half, or in its first few minutes or first hour of the candle, it actually grabs the liquidity on the opposite direction before heading down in its original direction. And if the original direction is bearish, there's a wick on the downside. The bias hasn't changed yet for this day. For the 2nd of August, the bias hasn't changed yet. So let's see what's going to happen. We're going to forward more candles here. Yep, looks like it's rejecting the top at this point in time. Our 2 hour candle is trying to flip bearish. That's good. Let's see. And 1 hour candle made a support around that area. Now this 1 hour candle is in its first 15 minutes, or in its first few minutes. And now the 15-minute candle has made that resistance, right? Now on a 15-minute, this structure is valid for me. This structure is valid for me. Look at the structure. Bum, 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 bum. So if this is a potential lower high, the price can actually push down. So what I need to do at this point in time is I'll measure the range. So let's measure the range from the current price. It's in about 18 pips of range until the top of the previous candle, right? So what I can do is let's see how this current 15-minute candle moves, right? No event, right? No news event right now. So what I'm going to do is I'm going to play it a little bit forward and see how the 15-minute approaches. If this 15-minute candle makes a high, and now look at this. Look at the 15-minute candle. Now this is a really important price action right here on a 15-minute, right? Previous 15-minute candle made a resistance. and this current 15-minute candle has made a high before moving down. So what I can do is at this point in time, I can take a sell within about 20 pips stop loss, because the range on the downside is 23, and I'm going to anticipate price retesting the low. So pretty easy. Now, again, one more time, if I have to break down the trade, my bias is a sell. Price has been breaking support, moving down, and we had a lot of volume pushing the prices down. Now, all I needed was a proper structure, and this is a proper structure where a resistance has formed. Obviously, this is a 15-minute resistance, but what if the price is starting to push down with volume? Because this is 1 hour after the NYSE, and very close to New York, very close to London. London session close too. So let's see what's going to happen, right? So what I'm going to do is I'm going to take a sell around here. So we're going to work with one lot. So obviously the initial balance was 5,375. So let's see how much of scaling we can do, right? So I'm going to take a sell around here. Take a sell with 20 pips stop loss. 20 pips stop loss, anticipating the price to move down. Now some of the guys may be wondering, why did I actually wait for the candle to make a high? So this candle making its high is sort of like a checkpoint for me. For example, if I have to manage my risk early, I'm going to wait for this candle to respect its own high. But if it's actually going to break its own high, that's the point where I'm going to close at least 50%, because that's how I manage my risk, right? So I'm going to let this play. I'm going to let this play. I've taken a sell. So what I'm going to do is I'll actually show you guys my trade too, right? I've given my idea, and this is the trade right here. This is the trade right now that's happening. So we are in about 8 pips in profit. So what I usually do is I secure once I'm in 10, 12 pips profit. So I'll close half once I reach 10, 12 pips in profit. Let's see what's going to happen. Oh, let's see. So for this candle, for the candles to push down, it has to respect previous candles high. That way my idea of sell could be valid. But until then, I'm just waiting. Let's see. Oh, and it's retracing at this point in time. Let's see how the 30-minute candle is looking. So the previous 30-minute candle closed bearish, making a clear resistance. For these candles to push down, it has to kind of respect the previous candle's high. Pretty simple, isn't it? Pretty simple. Now, for this candle to also move down, it has to kind of respect the previous candle's high. So if this candle starts breaking the previous candle's high, I'm going to close at least 50%. And the 50% is going to be closed around 8 pips. So comparing to 20 pips of original stop loss, 8 pips is almost about nothing. And also the current 15-minute candle has actually broken the previous 15-minute candle's low. So the chances to push down is actually looking good. So let's see what's going to happen. Oh, it closed bullish. Oh no, rejecting the bottom price. Let's see what's going to happen. Oh, and it's pushing down one more time. Pushing down. Let's see. Oh. Let's see. So we are in about 14 pips in profit, right? At this point in time, we are 14 pips in profit. This trade we took was 14 pips in profit. So was in about 1 hour after the NYSE. Obviously, slow volume because not one of the peak volume time, but it worked. The trading idea, waiting for the structure and waiting for the bias actually worked, right? So the idea was expressed as it was happening. So what I'm going to do is I'm going to close 50% right here, close 50% of the trade, and I'm going to let the rest run at break even. So letting the rest run at break even. So let's go. Dun, dun, dun. Now for the candles to push down, it has to kind of respect its previous candle's high and stop breaking the low, right? So my take profit is around here, is around 145, 152. So let's see what's going to happen. Let's see if this. Oh, and the candles are retracing at this point in time. Retracing, getting closer to my entry point because my stop loss is actually trailed down to the entry point. Ooh, and I got stopped out. So the position got closed. So if we look into the history, so look at this. Look at this. So the 0.5 out of the one lot was closed around 14 pips, right? And rest of the position was left to run at break even. And we started with 5,375 and we ended up with 5,418. Now what we're going to do is, this was the end. This was the end of the New York session at 8. So a New York session at August 2nd. So .fix says, Peeling Mindset, do you use soft Forex? Yes. That is correct. That is correct. So what we're going to do is we're going to get into another day. So let's see what is the date that we have here. So the other date we're going to trade is 8 August 6th of August, right? So let's go back here. 6th of August. So this is the 2nd of August. So we're going to go to 6th of August. 6th. 3rd, 6th. All right, this is the 6th of August right here. Wow, look at this. Look at the way the candles moved, right? So we obviously took a sell. The selling idea worked, but look at this. Now this is something to backtest again. So .fic on YouTube says, is that only application for MT4? Yes, that's correct. That is correct. That is correct. All right, watch this. It's kind of interesting how the price moved, right? So we were trying to talk about this. The price in pound yen, the price in pound yen pushed all the way down after this heavy rejection, and started closing down, started breaking support, and it ranged for a bit, right? This is what happens when the candles move heavily. When candles move in a consistent direction, this is what happens. It makes boxes. It actually makes boxes. It moves in this sort of way. Look at this. Moved down heavily and started ranging side by side. Now, after moving side by side, it's going to move down again. Ooh, moving down. Now what is it doing again? It's trying to move in a box one more time before it could move down consistent or move up consistent in some sort of direction. So now, because we know it's ranging side by side, now what we can do is to build bias one more time. Let's go into the weekly time frame. And we will erase everything out of this. Just give me a second. Oh, Kevin is in the house. Kevin says, nice. NYSE. Now look at this. Look at the way the previous weekly candle closed, right? Obviously, we are, the 6th of August is apparently a Monday. So this is the start of the week. So important ideas. So start of the week, what happens is weekly candle could move in an opposite direction before moving in a consistent direction or consistent way. So just looking at the weekly candle, because previous weekly candle closed bearish with a long liquidity wick from the top. Look at the wick. Look at the wick on the top of the previous weekly candle, right? That weekly candle's top wick is very impressive. So just looking at the weekly candle, my weekly bias is going to be sell because there's a clear traffic on the left hand side. My bias is going to be sell. But what I need to see is this weekly candle, if it progresses in a way that, you know what, it moves up, grabs the liquidity and rejects the previously broken support and it starts moving down, that way my bias is going to be so strong. It's actually going to be so strong. And a monetary policy sort of news is out. So that means price is definitely going to move consistent. That's the time when the big institutions, they plan to exit or entry. So if this is caused by all of the institutions exiting out of pound yen, I mean, it's actually going to push down until they find a common ground where they can buy pound yen in a deflated sort of a price. So have to see how this weekly candle progresses, right? Definitely have to see. So what I'm going to do is, all right, so TBS Capital says, is this software for free? No, man, it's not for free. There is a free version as well, but free version, I think it's hard to work with. It's hard to work with, but this is a paid one. And this is a paid one, so it's quite different. So what we're going to do is on my weekly candle, as I said, my bias is sell. So I'm going to take the time to pre-New York one more time, because pre-New York is something I've been focusing into, right? So let's go into pre-New York's time in the on the 6th of August, pre-New York time. Let's see. Pre-New York time. Pre-New York time. Look at this. If you remember what I said, obviously, look at this. Look at the way the price is moving side by side, right? So I reminded you guys about the price action where price drops, moves sideways. Price drops, moves sideways, and it's moving sideways. And for now, the price is dropping those prices, breaking the support and starting to move down. So just by looking at the 1 hour candle, my bias could be sell. And this is one after before the pre-New York. So what I'm going to do is I'm going to take it. I'm going to take the time exactly to pre-New York. Now look at this. So what I'm going to do is let's go into the daily time frame. Daily time frame is obviously very close to this daily support, right? So what I need to do is I need to highlight the daily support. This is another potential daily support that the price is very close to. Now some of the guys who don't understand the idea of auto flow, they're gonna take a sell right away. But I have to be careful taking sell, because if you look into the daily sort of a perspective, now look at this. Just give me a second. Just look at the way how the candles are moving, right? Look at the way how the orders has been placed, or potential orders has been received in the market. So this was the ground where it was a demand area before. A demand area. That's where the price tapped in, rejected that level, and started pushing up. Now, this was the area where the institutions potentially decided to exit. They said that, you know what? Man, we're going to exit. We took our profits. Now, all of this profit is enough for us. And they started exiting out of the entries. And the other part of the institutions, so they obviously started entering here, anticipating pound yen to push down. So again, another cycle of market moving. So market moved down one more time. So after moving down, look at this. It tapped that demand area one more time. So this was an active demand area or active support area. So once price tapped that, price started rejecting it and started moving up again one more time. And one more time, institutions or big banks who managed to enter here, they possibly exited around here. They moved down one more time. And it's very close to the demand area. Now, here's the thing. The bias could be sell on a weekly sort of a time frame, but if the price starts reacting around this area, maybe there could be another entry of institutions trying to drive the price up. That could be the case. So I have to be careful. Today's New York session, pre-New York, obviously could present us with a lot of scalping opportunities, but I have to be careful. Because candles can react around this time. Candles can react around this area anytime. And obviously it's the start of the week. So do I really think that the weekly candle is going to move down in its first few days? Maybe no. So the answer could be no, right? So what I'm going to do is, now again, one more time. Daily candle is still bearish. My bias is still bearish. Previous 4-hour candle closed bearish. If this 4-hour candle finally makes a top wick before moving down, then my entry point is going to work, right? So my entries are going to work at that time. And we are 1 hour in this 4-hour candle. So what does that tell us? That tells us that it has 3 more hours left for its close. So I have to wait for the 2 hours out of the 4-hour candle to close. So in the last 2 hours of the 4-hour candle, I will see a consistent direction, right? So look at this. Candles are retracing, which is good, which is nice, because at the end of the day, what I want to see is I want to see candles respecting the previously broken support, and that way my bias can slowly play out. If the candles respect the previously broken support and starts rejecting and starts moving down, my sell could work out. So what I'm going to do is now let's go into the 30-minute time frame. 30-minute time frame. Look at this. This is the previously broken support, and candles are retracing up. Now, for the candles to push down, candles have to make this. Candles have to make this sort of structure. This was the box. Candles push down. Candles have to make another lower high, potential lower high, and start moving down, and that way I can take a sell. That is clear as anything else. Okay, so clear. Now let's see. Now what I need to see is I need to see at least a 15-minute candle resistance to start with. Obviously, previous 15-minute candle, look at this. Previous 15-minute candle closed with a small body on the upside. So what does that tell us? Candle's body in relation to volume tells me that, you know what, the volume on the upside could be dying. So if the volume on the upside is dying, maybe the volume on the downside is coming now soon. So I have, from the current price, the range on the downside is 22 pips range. Now all I need to see is I need to see a 15-minute candle close. Ooh, it's moving down. Oh, so look at this. So the bias was sell. At this point in time, obviously I missed entry because I was waiting for a 15-minute candle to close. And a 15-minute candle hasn't closed, but we moved down. So sometimes what happens is you anticipate a move, but you miss out on the trade because it just moves early. So to catch an early trade, one of the ideas could be placing a pending, but this one just moved down, not even closing 15 minute out of the hourly candle. So not the best position to be in, right? Now let's see. All right, now look at this. 15-minute candle closed out of the hourly candle. Now we have 45 minutes left in the hourly candle and actually achieved the whole range. I was waiting for the resistance to form, but the candles just pushed down and achieved the whole range. My bias of sell was correct. But what do I learn from this trade now? Because I've missed it. What do I learn from this trade? So what do I learn is the previous candle closing with almost sort of a no body size or a smaller body size only told me that, you know what, the volume on the upside was dying. So what could have I possibly done correct? Maybe I could have placed a pending below the previous 15-minute candle around this area, so around 144, 245, with about 10 pips stop loss, anticipating the price to push down and achieve the range. If I had taken that sales from that level, man, oh man, I would have secured 16 pips. So this is what you do in your regular trading lifestyle, right? So you come into the market with anticipation that, you know what, I will try and take a positive trade. I will try and capitalize out of the market. But if I won't be able to actually make money out of the market, I would rather take a knowledgeable experience. I would evaluate the trade and I'll look into the market situations of today to see how could have I done something right. So that's what you do, right? So this trade was obviously missed. Pre-New York trade, a sale was anticipated. So hopefully, look at this. Now, if I am to reverse that candle, now look at this. I have reversed the candle, right? I have reversed that candle. Now, if I was to place a pending around here, anticipating the price to push down, obviously because candles haven't closed bearish yet, so I cannot take a sell here. Taking a sell here when the previous candle closed bullish, maybe it doesn't make sense. So what do I need to do? Maybe I'll place a pending to see if the trade works. Now look at this. So what I'm going to do is I'm going to take a pending below the previous candle's low within about 10 pips stop loss. So the stop loss is placed above the previous candle's high, right? And I'm anticipating the candles to hit the low, the daily low. So the risk to reward is 1.5, so which is a good risk to reward. Now we know the candles are pushing down. Now look at this. This is how the trade would have worked out. Would have tapped the price, not the best position to be in, but it's working out. So this could have been a possible scenario. And look at this. The TP is almost about to hit. Oh, it's retracing up. Interesting. Now, if the candles would have retraced like this, man, I would get out of the position. Obviously the candles pushed all the way down till the TP, but obviously because of these spreads and because all of the market movement, sudden market movement, maybe the price was not able to tap this support. Maybe the order was not filled 100%. Obviously, it moved all the way down, but when I took the position right now, I should have closed it manually. So that's the case right now. I should have closed the trade manually, right? So simple as that. Pretty simple as that. Now let's see what happened after that potential move. Let's see. Look at this. Previous 30-minute candle closed bearish, clear as sky. Previous 30-minute candle closed bearish. There's a wick on the downside for the candles to fill. So if the candles are to push down, it has to respect previous candles high and push down, right? Now this is another situation where I can actually take a sell, because structure-wise it kind of makes sense. Structure-wise it kind of makes sense. Let's see. Tune, tune, tune. Tune, tune, tune. 30-minute has that structure on the downside. Oh, 5-minute candle. Alrighty. Let's see. So the previous 15-minute candle closed bullish, right? So just looking at the 30-minute candles, I can actually take a sell. But again, at the same time, previous hourly candle closed bullish, and my bias is sell. But do I really want to take a sell in a 14 pips range right now? Especially when the previous hourly candle closed bullish, and we are in about the close of this hourly candle. Maybe no. Maybe I'm not going to take this entry. I'm just going to follow the chart. Let's see what's going to happen. I planned to not take an entry right now because not so comfortable. Not so comfortable. Again, if this 15-minute candle finally makes a proper high and finishes bearish, that way it's better. But I'm not going to take an entry here. Oh, look at this. Previous hourly candle closed bearish. Interesting. Interesting. And we are 45 minutes away from the market open at this point in time. 45 minutes away, and this is the market open right now. No major news happening, no nothing happening this day. So on the 6th of August, there was nothing happening. Nothing happening. Now this is the market open. So market open could also be a volatile sort of a situation, because the candles can easily retrace, easily try and grab its premium price before moving in a direction. So what could be a better situation? To wait, because this is the first few hours of the hourly candle. Previous 2-hour candle closed bearish. 4-hour candle has made that proper top wick. Now at this point in time, look at this. The 4-hour candle is actually looking nice. Why? Because the 4-hour candle is bearish. Previous 4-hour candle closed bearish. This 4-hour candle has a top wick, a decent top wick, which can act as a fuel for this candle to push down. That could act as a fuel. But the only funny thing is, this is a daily support where the price is around. That is a daily support. And especially on a Monday, are we actually going to experience volume? I mean, I have to ask questions, right? Especially when the previous candles are closing with long wicks and ranging side by side. So I am definitely not going to take an entry here. No. A big no-no. Let's see how it's going to move. Let's see how it's going to move. And this is the close of the 4-hour too. It's actually interesting. Close of this 4-hour. All right, so the previous 4-hour candle close with a bearish body, a top wick. I mean, it's still bearish, showing some bearish signs. So now we are almost about 22 minutes away from the NYSE. So this could get interesting, really interesting. Let's see how it's going to move, right? All right, now this is the NYSE time. This is the exact NYSE time. NYSE open, markets ranging side by side. Let's see what happened in the next 15 minutes. Nothing. Candles are ranging. So my decision to not take a sell, I mean, turn out to be positive, turn out to be good. So the first trade, so the NYS pre-New York entry that we missed on this date was a sell below this wick. But again, that was not the best position to be in. But a pending could have been placed around that area. Looking at the way how the previous candle closed, with a small body on the upside, showing less potential on the upside, right? Obviously. And the candles are ranging side by side. Let's see what's going to happen. It's actually kind of respecting the daily support. And bouncing off the daily support. Now, around this time, I would be off the market already. This is the time where I'll be off, especially after 30 minutes after the NYSE. I'm off of the market. I don't look at the market anytime. I rest and I come back the next day. So what I'm going to do is I'm going to head back to the next day. So this was the first day out of the week. So I actually want to see how the weekly candle progresses, right? Let's see. All right, this is the Tuesday, second day of the week. Interesting. August. So what I can do at this point in time is, just give me a second, working with MetaTrader. MetaTrader is a lot of manual work. All right, so I'm erasing everything and drawing a fresh support, potential daily support right around this area. Potential daily support. And let's go into 4-hour time frame. Previous daily candle closed bullish. 4-hour candle actually, a previous 4-hour candle closed bearish, showing some sort of bearish sign here. There is a chance prices could continue down here. But let's see what's going to happen, right? So what I'm going to do is I'm going to forward the time all the way to the pre-New York here. One more time, pre-New York. Because I only trade pre-New York, New York, and NYSE. Right now, this is 1 hour before the New York. So let's see what's going to happen here. Now, looking at the 4-hour candles are rejecting that daily support. So there could be chances for the price to push up as well. So this is exactly pre-New York starting time. Obviously, this current 4-hour candle retracing down. Let's look at the daily candle. Daily candle also hanging around there. Daily candle hanging around there. Daily candle has a decent top wick. 4-hour candle moving below the previously broken resistance level. So let's look at the 2-hour candle. Look at this. So this was the first candle that closed above the resistance, and slowly candles started rejecting, started making resistance, and it's actually below that resistance area at this point in time. And this 2-hour candle, is going to close in the next hour. If this 2-hour candle finally closes in between this range, and within this range, the bias could still be sell. Let's look into the hourly time frame. Look at this. Previous hourly candle closed bearish with a rejection wick on the top. So the bias is still sell. Now, if I have to look into the market in this sort of a view, right? So for example, look at this. If this was a range where the price was ranging side by side, now for the candles to push down, what the candles need to do successfully is candles have to print something like this. Has to close outside the range with a wick potentially, and if the next candle rejects the range with its wick like this, one more time, reject the range with this wick and start pushing down. Now this could be a possible entry. This could be a possible idea to speculate on. This could be a possible idea. Let's see what's going to happen in the next few hours. Obviously, this is a range, no trade range. So I'm not going to trade in a no trade range, right? Let's see. We are 1 hour before the market open. 1 hour before the New York Bank open here. Starting to push down, very close to this daily support. I need to see candles closing below. And this is the open of the New York Bank open here. All right, so the previous 15-minute candle closed at the very bottom of the range. Now, what I need to see is candles rejecting the top range, So for example, if I have to erase that box out of there, dun dun dun, pretty rangy, pretty rangy. Let's see. All right, now look at this. So this is the exact situation I was talking about, right? This is the exact situation I was talking about. Now this candle right here closed out of the range. Now the next candle has to print something like this. For a possible entry, candle has to retest that broken support, broken range, has to reject those price, and has to start pushing down. If this is going to happen, this is the trade I'm going to take 10 out of 10 times. This is the trade I take every time. If this is going to happen, price broke out of the range, next candle makes a high, starts pushing down. On the flip, I can take a trade because I'm confident with this is a textbook trade right here. So let's see what's going to happen. Let's see. Oh, let's go into the 15-minute. Yep, 30-minute candle has closed. But again, at the same time, you know, when there's a lot of volume, you miss out on this sort of trade too. So we will see if we're gonna miss out, because you don't want to take a trade on the first candle, on the break of the on the break of the range on the first candle. It's not very safe, or I would say it's not logical. It's not logical. It's just like gambling. For me, that's going to be gambling. Right now, look at this. Hourly candle finally closed bearish. Obviously, this was the trade I was looking at. This was the candle I was looking at. Now, we are 26 minutes away from the NYSE. So we will see what's going to happen in the next few minutes. Have to see a top wick before the candle could push down. Have to see a decent top wick. And this is the NYSE time right here. This is the NYSE. All right, previous 15-minute candle has made some sort of resistance here. So it looks like candles could push down. Candles could push down here. Let's look at the downside range. What about the traffic on the left-hand side, right? Again, at the same time, I have to see the traffic on the left-hand side. Ooh. In about 9 pips. Not that good. Not that good. 9 pips of range is almost about nothing, to be honest. Almost about nothing. We will see. NYSE. And this is 30 minutes after the NYSE. NYSE open. Candles are still printing bearish. Need to see a proper resistance before taking a sell. Now, what I'm going to do is I'm going to simulate 30 minutes. 30 minutes after that, because if there was no trade this day, I wouldn't be hanging around. I wouldn't be hanging around till the end of the market or the till the last clock. I wouldn't. So usually I stay around till the NYSE, and 30 minutes after that maximum, and I get out of the market, right? So that's what I'm going to do here. Yep. And looks like the move is happening right now. It's kind of rejecting the range. It's very close to the range. If the candle starts flipping bearish, I mean, it can move down. It's London time. But this is something I don't take, or I don't trade, right? So, yeah, this is day for me. This is a no trade day for me. So what I'm going to do is, so Tuesday, Monday was a trade day. Obviously, we started with $5,375 today on simulation. So 5,000. 375. Let's go into the next day. Let's see what happened on the 8th of August. Now 8th of August, we're gonna go to New York session one more time. New York session. New York. Wow. The bias of sell finally played out, didn't it? Finally played out. Interesting. Now at this point in time, the weekly candle is also so bearish, and there is clear traffic on the left hand side. The gap could be filled. The gap could be filled, and the ultimate target for GJ could be this right here, this demand area, this support area. That could be the ultimate target for GJ. So let's look into today's daily candle, pretty bearish at this point in time, below the daily support as well. So pretty clear that you know what, bias is a sell. Previous 4-hour candle closed bearish, and this is the start of the new 4-hour candle. So usually what we've seen is at the start of the 4-hour candle, we have seen a lot of retracement, right? So now for beginner traders, why this idea, or this could be a position to look into or keep a note of, is you don't sell at the very bottom. Obviously, the market has moved. So usually, if you trade New York session, and if the market has moved significantly on the downside, so what is the best idea? Our best idea could be to wait for resistance to form, a range to physically see, and that's when you trade. If you sell at the very end, the market's gonna be bad to you, man. It's gonna hurt you a lot. So let's see what's gonna happen right here. Wow. Ooh, look at this. All right, so I clicked 2 times. So we are around the New York market open at this point in time. New York market open. So the possible trade was around here. On the break of the lows, maybe the stop loss could have been in about 15 pips. Anticipating the price to push down with volume. Obviously, the daily, weekly bias was also sell. So this candle was the trade right there. Not the best position to be one more time. So look at this. When I reverse back the candle, so what could have been a possible entry? Look at this. Dun, 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 dun. All right, look at this. Now, this was the close of the 15-minute out of the hourly candle, right? So when I say that, look at this. Hourly candle is still in progress. It hasn't flipped bearish. So it's actually trying to make a top wick before moving down. So how do I know that? Because this is this 15-minute candle is a part of that hourly candle. And for the candles to push down, obviously what we've seen over time is we've seen candles doing this. We've seen candles doing this, and this sort of motion or this sort of price action is pretty clear in the smaller time frame. Now, what sort of smaller time frame? The question is, what sort of smaller time frame? Maybe a 15, maybe a 30. Now, the previous 15-minute candle clearly did that. Now, waiting for 15-minute candles to do something similar here, right? Now, it's similar to the previous situation. Our sell on the break of the lows was pretty clear. Now, let's see how a situation can play out here, right? Let's see. Look at this. Candles are breaking lows. I mean, to be honest, personally, I wouldn't take a market order here because, again, this is only selling at the bottom, very bottom. So I haven't seen a clear resistance, right? So the idea of placing a pending around here is still dangerous for me. So placing a pending around here, man, to be honest, I wouldn't take that. To be honest, I wouldn't take that. I just wouldn't take that. On the hourly candle, on the other hand, is looking so clear. Hourly candle made that top wick, respected the previous candle's high, and is pushing down nice and slow, filling the wick on the left-hand side. So it's kind of interesting. It's pushing down, it's going to fill the wick, and the trend is bearish. 100% bearish trend. Bearish trend. 4-hour candle is bearish. 30-minute candle made that new resistance right around that level. Interesting. Really interesting. Let's see. Now we are dropping pretty heavy at this point of time. Dropping pretty heavy. 1 hour before the market open. Pre-New York is actually dropping the price. Pretty heavy. Drop. This is the market open right now. This is the market open. So is the market open going to cause a retracement, or what's going to happen? Let's see. Fast forward is retracing. That's a good sign. Now selling at the very bottom is not a good idea. As I've said, my friends, have to wait for a proper resistance. Obviously, sometimes it's hard to keep a track of a proper resistance. I mean, what is a proper resistance, right? Sometimes you just count on the volume. So the pre-New York possible trades were definitely in anticipation of the volume. Definitely in anticipation of the volume, right? Right now, candles are retracing, which is a good sign. So for the candles to retrace is only telling me that, you know what, on a higher time frame, it's making a wick for the next candle to fill. So if this candle is going to close in the next 30 minutes, this 4-hour candle, maybe the next 4-hour candle is going to fill that wick. So let's see what's going to happen. Fast forward. This is the close of the 4-hour candle. Now for the next 4-hour candle to fill the wick on the downside, there is a higher chance. Is actually a high chance for the candles to fill the wick on the downside. So let's see what's going to happen here. We are 30 minutes away from the NYSE at this point in time. 30 minutes away, 15 minutes away from the NYSE. All right, now this is a proper resistance that the candles have made, right? Proper resistance. Obviously, I wouldn't take a sell right at the support, but it kind of makes sense for the 4-hour candles to push down. If you look into the 4-hour candles alone, it kind of makes sense. It hasn't made that proper wick on the top, but looking at the 4-hour alone, looking at the bias, I mean, it kind of makes sense. I know that a lot of swing traders, they would take a sell because they're going to anticipate that, you know what, 4-hour candles going to move down in an overall sense. So they want to take a proper entry. Usually, swing traders, they take an entry after candles close. They take an entry when positions have broken the recent rejection levels just suddenly, right? So they take an entry with like big, huge ass stop loss, and that's how they take an entry on the swing sort of a style. But on the other hand, for me, for a scalper, for a daily scalper who shows up to the market around volume time, I have to see precise support, precise resistance. And if it doesn't work, that's going to be a no trade day for me. No trade day. Now, on this day, the volume was experienced, a lot of volume was experienced around the London time. A lot of experience. London and pre-New York was the volume of this market. Now let's see what's going to happen, right? Alrighty. So I planned not taking sell here. Previous 15-minute candle closed dodgy with the rejection wick on the top. Market's rangy right now. So all of the moves happen around pre-New York and New York, and it's kind of rangy right now. So my bias is still sell, but I haven't taken any trade. Previous hourly candle closed bearish with a proper structure of resistance. So if there's a potential resistance around there, have to see this candle make a proper wick, and that way could actually scale into sales. Now again, the thing is, I usually don't stay 30 to 35 minutes past the NYSE. So this again, on the other hand, is just a speculation. I wouldn't trade this time. For me, it's a no trade time. So I'm just going to see how the market moved, right? I haven't taken any trade this day as well. Really interesting. and a no trade day. Now if I have to be creative, or if I really want to learn what could have I done right in this session, I'll go into the 4-hour time frame. Now look at this 4-hour candle. The previous 4-hour candle moved down consistently, right? Now 2-hour candle. 2-hour candle also moved down consistently. So what I can do is I'll actually go back. I'll go back 2 hours. 2 hours ago, and I'll see where was a nice situation where I could have taken a sell. All right. All right. Now this right here. This right here is the pre-New York. Now, where could have I aggressively or where could have I taken a possible entry with a feasible stop loss? Let's have a look, right? So this hourly candle closed bearish, which is a good sign. Now, if I was to take a sell, looking at the hourly candle, I would need this current hourly candle to make a top wick before taking a sell. So let's see what's going to happen here. Let's see what's going to happen. It hasn't made that top wick. All right. Now hourly candle. Look at this. If I was actually looking into pound yen right now, hourly candle has made that top wick. This candle moving up is only making a top wick. So if this candle could finally flip down, maybe on the break of its low, that could be a possible entry. Let's see if that idea is any good. Now, this is how you learn. You go back into the trade and you see where could you have done things right. Now, let's see. On the break of this candle's on the break of the own candle's low, maybe I'll take an entry right around the level. All right, now look at this. Ooh. Oh. Dun dun dun. On the break of the own candle's low. Now, all right, now this is the position where I'm going to take a sell, right? Because why? The candle has made its proper high, respected the previous candle's high. This is pre-New York volume time. Obviously, when I look back into the trade, this could have been a possible confluence or possible way to take the trade. Obviously, an aggressive trade, taking a sell right at the bottom of the range, but this could have worked out because there's a clear range on the left-hand side and there's an ultimate weekly target. So let's see. I'm going to take a sell right here. Within about 11 pips stop loss, anticipating the price to give me in about 20 pips. $20 right here. 20 pips right here. Fast forward and it has moved down. Fast forward and hit the target. So yeah, that is pretty cool, isn't it? That is actually pretty solid. So this is one of the best ways to learn, to go back into the trade and see where could you have possibly taken a trade. So we have only taken one trade out of all these days, missed out some of the trades that happened with volume alongside, but was actually hard to spot on. Obviously, so only taken one trade and started with 5,375, and we are up to $5,410 only. All right, so now what we're going to do is we're going to go back into the random date generator, and it says August 15. So let's go back into August 15 here and see what happened on August 15. August 15. August 14. August 15. All right, now we are here at August 15 right now. So what I'm going to do is, after the candles pushed down, it actually kind of moved up. Interesting. So what I'm going to do is, let's do this. So the daily levels are still valid. Apparently this weekly support was actually, that super target was tapped. Now when I look back into it, that super weekly target was actually tapped. Look at this. Look at the way it actually tapped that level. Now it's rejecting that level at this point in time. Now on the 15th of August, now if I have to go into the weekly time frame, let's go into the weekly time frame. Look at this. Weekly time frame is bullish. Has opened up with a gap and is rejecting that weekly support at this point in time. Weekly candle is still bullish. This is a Wednesday. So this is 3 days in the market already. 3 days. And do we have any high impact news? Oh, around London session, we have CPI. So that's definitely going to affect the prices in pound yen today. It's definitely going to be rangy until then, or it's actually going to move in a haphazard way. So what I can do here is I can forward it to the New York session, because that's what I trade. New York session is the baby. Now, this is the time. This is pre-New York, right? And we have retail sales in US dollar too. Interesting. So the CPI in pound, the CPI, so they were actually expecting good numbers, and the news turned out to be positive. So that means this is something we actually talked about, right? Order flow. Now look at this. If institutions were to enter for a sell in pound yen, this was a possible entry where obviously a lot of institution tier 1 banks entered right here, and they took a sell. They actually ride the rally all the way down. Now, what could be a possible area where they could actually secure some of that position? This right here. Look at this. This is a possible area where the institutions are going to get out of. If they were in this meltdown, this is one of the areas where they're going to get out of 100%. So if they're going to get out of this area, the prices in pound yen is actually going to retrace. And if there's another cycle of market push on the upside, this is a possible area right here. This is going to be the possible support where the price is going to bounce off of 100%. 100%. So I have to see how the daily candles actually finally close. And obviously daily candle closed bullish. I mean, yeah, it's kind of interesting, isn't it? Look at the way it's moving. It's kind of rangy. So all of a sudden, look at this. Market moved down, moved sideways. Market moved down, moved sideways. Market moved down, and it's moving sideways, ranging for some time now. So 15th of August doesn't seem like the best day to trade. Now for buys, look at this. For buys, I have to see candles close above. 149, 141,805 at least for a proper buy. Looking at the 4-hour candle. Now looking into the 2-hour candle, I can adjust this area. Oh man, I don't know. Buys, yeah. Oh, let's see what's gonna happen, right? But my anticipation is a upside move. Is the upside move coming? Let's see what's gonna happen. And for a proper sell, I have to see candles breaking below 140.1097 at least. So this is gonna be the level where the price has to close below for a proper sell. Right here. So buys above this area, sells below this area. Let's see. Now looking at the hourly candle, I could actually take a early buy around this area, but this in a wholesome sort of a idea is a range. 68 pip of range. This right here from 141,795 to 141,100. 70 pips of range. 70 pips of range. So I would want to stay away from a nasty range, and this is a nasty range right here. Now, obviously pre-New York, so we're going to forward the candles and see how the hourly candles are going to close and where are they going to close. Look at this, so volatile. In the next hour and 30 minutes, we have this retail sales. And they are expecting bad numbers. So let's see. Ooh, it's pushing down. Pre-New York. Now, this hourly candle actually closed below 141.094, which is a good sign for sell. Now, all I have to see is with volume, I have to see this candle retest the previously broken range and start pushing down. That way I can take sell. But on the other hand, what I've seen is around the high impact US dollar news, I've also seen shock effects in pound yen, pound USD, pound AUD. So I will see how the candle is actually going to progress. Oh, and the previous, oh look at this, previous 15-minute candle closed bearish. A good sign. It's actually a good sign right there. It's a good sign for sell. Let's see. This hourly candle is also looking good. If this hourly candle makes a decent wick, rejects this range and starts pushing down, that is a really good time to take a sell. But obviously in the next 10 minutes we have this retail sales, so don't want to be massacred by the market. Our hourly candle at this point in time looking really good, but let's see. This is a retail sales news time, news event coming in, and this is the news event time, right? Retail sales, and the news turned out to be positive. So they were actually expecting bad numbers, and the news turned out to be really good. Now at this point in time, look at this. Pound yen has a higher chance of pushing down than anything else. Simple as that. Now a possible entry could have been once this candle made its high, started flipping bearish, a stop loss above the previous candle, anticipating the price to move down with volume. That could have been an idea here, right here. 15-minute candle were seemingly ranging, but yep, candles have a higher chance to push down. Higher chance to push down. Obviously, I haven't taken an entry yet. But higher chance to push down, man. Higher chance to push down. Let's see. And candles pushing down nice and slow. Nice and slow. Ooh, and it's pushing down. Wow. Look at this. So this was a valid trade right here. Now, this was the idea I was talking about before, right? So what I was talking about ranges. This was the possible range. Now, if I have to narrow down the range, let me see if I can narrow down the range. This was a possible range where the price was ranging at, and this was the first candle that closed outside the range. All right, this was the first candle that closed outside the range. This is the candle which actually retested that broken range with its wick, and this is the trade I've been taking forever now. This candle retested that range and started pushing down. The feel of the wick, the candle started feeling the wick. There was a clear traffic on the left hand side, and there was a clear range, and the candles have achieved that range. This is the trade that has made a lot of money to me. This is the trade that has made a lot of money. So that was the idea. Simple as that. Obviously, didn't take a trade because retail sales was around, and obviously simulation is way faster than anything else. So when we do simulation here, simulation is fast forward, right? A lot of ticks happening in a second. It's not as live as what happens in your trading experience. So for example, if I was to back forward it around the retail sales time, look at this. Now this is the retail sales time where there was a lot of volatility. And usually I wouldn't take entries around retail sales, whatever time it will be. Now, looking into the market structure, it makes so much clear sense that, you know what, an entry after the hourly candle making its high, I mean, this is pretty good. This is actually pretty solid. And 30-minute out of the hourly candle also closed bearish. So the chances for sell are increasing one by one for this hourly candle, and the candles are pushing down so nice and slow, right? It's actually good. It kind of makes sense for sell. It kind of makes sense. Wow, look at this. Look at the volume here. Wow, pretty nice. Wow. So an entry around this point within about 12, 13 pips stop loss. This would have actually attacked the whole range on the left hand side. Look at this. So it turned out to be really, really nice. Even though there was retail sales around the time of entry, possible entry point, obviously the volume drove the price down. But an entry around this point was a really beautiful entry within about 11, 12 pips stop loss, anticipating the price to move down on a higher time frame, especially on an hourly time frame. It was making so much sense. Making so much sense. Now the candles are pushing down nice and slow. Interesting. And NYSE volume also drove the price down. So obviously, when backtesting, we have to obviously note down stuffs like volume coming from what factor, and volatility side by side. So one good thing about this software is it actually gives you like historical news event data as well. And that way, it's way clear to backtest side by side, way clear. Now, obviously, 15th of August also turned out to be really volatile. Obviously, didn't take any entry. So what could have been a possible entry, even if the market was moving too fast? Maybe an entry around the break of the low. From the break of the low, the range would be really less, in about 19 pips, which is still good, but the stop loss would be 20 pips above the current candle, right? So that is not as good as it could be. So for example, entry could have been around the break of the low. If there was so much of volume at the end of the day, on the break of the low with in about 15, 16 pips of stop loss, that could have been a possible case here. That could have been a possible case. So if I have to journal through it, if I have to journal this, what I'm going to do is I'm going to say, you know what, there was a range before a high news event. One of the candles closed structure-wise. There was higher possibilities for the candles to push down. Just needed the next candle to make a high or reject the range before moving down, which it actually did. Right? Now, obviously, news event happened, whatever happened. So that was a USD news. I didn't see a lot of shock effects in pound yen. So that could be another back testing. Was a US news event. Obviously, pound yen still moved consistent with a lot of volume. So maybe a anticipation of volume and the entry on the break of the previous candles low, previous hourly candles low, with 15, 16 pips of stop loss was the trade. So that's how you actually backtest. That's how you note down your data. So you have to build your own bit of database, which you can go back into and see your possible missed entries. So for example, if this sort of a situation is going to happen in the live market in this coming July or coming August, man, I'm not going to leave these sort of entry now, because I've built my database and I've kind of refreshed my mind one more time. So it's definitely a big help, your own database. Kind of interesting. Just give me a second. All right, so we're gonna do two more dates and we will head out. All right, let's see. So 17th of August. This is 17th of August. What happened on 17th of August? 17th of August. All right, 17th of August, New York session. Bang, bang, bang. What happened on 17th of August? Let's see. 17th of August, market is rangy, pretty rangy at this point in time. Again, daily candles hanging around that weekly sort of a support area. This gray area is a weekly support area. Was a final target area for us, and the price has tapped that level. Obviously, daily candle is ranging side by side. Let's go into 4-hour time frame. 4-hour time frame. Previous 4-hour candle closed bearish. Is actually below that top range, but 4-hour is ranging on its own at the same time. Now look at this. 2-hour is also ranging side by side. And do we have any major impact news here? No impact news here. Let's see if there's any major impact news tomorrow. Dun, 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 dun. No major news ideas. Okay. No major news. Let's see. So this is Friday. Oh, that could be the case. Fridays are always freaky. If you know what I mean, you know what I mean, right? So Fridays are always freaky. So at the end of the month, at the end of the day, at the end of the week, you don't want to lose all your profits, and you want to stay a little risk averse, especially on a Friday. Right now, if I was to anticipate a sell, I need to see candles breaking low. And obviously that'll be a proper selling idea right there. Now this is the proper pre-New York time. This is the time where I would have appeared in the market. Right now the candles are breaking the low at this point in time. Friday, candles are breaking the low. And where is the possible range here? Okay, a possible range could be below 143.30 in about 40 pips of range. So if the candles are to push down below this area, let's see. Ooh, this 30-minute candle has closed below the previously broken support area. Nice, in about 20 pips range. And on the downside, we have more. So for the candles to push down, I need to see a proper structure, at least on a 15-minute time frame. Let's see. So what I'm going to do is I'm going to follow the chart. Let's see. No funny setups taken. I need to see a proper setup. Proper setup. Let's see. Yep. Now this is good. This candle. Look at this. If you can see this, look at this. This level was the previously broken support area. Price broke that support, bounce off this recent support on the left hand side. But this candle is kind of retesting the previously broken support. So if this candle has to close above, maybe sells are invalid. But if the candles are to reject the previously broken support, that could turn out to be resistance. We can see sells. We can definitely see sells. So let's see. All right, now this 15-minute candle closed bearish. Obviously, selling near a support is not that a good idea. But structure-wise, volume-wise, this is volume time. So obviously kind of makes sense. Previous 1 hour candle closed with no wick on the top, a wick on the bottom, but the bias is still sell. So let's see. 2 hour candle. 1 hour candle. 30-minute. 15-minute. Just looking at the 15-minute alone, I mean, it looks like a selling structure, to be honest. Looks like a selling structure. Let's see what happens if I take a sell right here, right? I'm going to take a sell with, so this would obviously be the first trade of that day. So within about 11 pips stop loss, anticipating the price to push down, giving me 15, 16 pips. So let's see what's going to happen. So I just took an entry, right? Let's see what was the outcome of the trade. Volume time, anticipating volume. If there's no volume, no trade, obviously. So the trade is still running. If the candles break the previous candle's high, obviously the trade is invalid. At this point in time, 15-minute candles seem like as if it's ranging. Previous 30-minute candle closed bearish. So if the candles have to move down, it kind of has to respect the previous candle's high. Let's see what's going to happen. Oh, and this is the point where I will close the position, right? Because it's retracing so heavily, and the previous hourly candle closed dodgy. So this could be a sign that, you know what, the volume on the downside is dying. This could be the sign. On YouTube, Nishchul is saying which software is this? This is Soft Forex. This is Soft Forex. Well, let's see. I'm still gonna let it run. Let's see what's gonna happen, right? And the trade got closed out right there. Trade got closed out. Definitely got closed out. So we are in about 52 minutes away from the market, and the market is kind of rangy, less volume in the market, and obviously it's Friday, so not that nice. 15 minutes after. All right, now this is the market open. 15 minutes in the market, and the market started dropping pretty heavy. Interesting. Kind of interesting, isn't it? So this 2-hour candle only started pushing down once it made its high. Once it retested that previously broken support, obviously fell down later after making a proper high. So it's pretty clear. Look at this. So if we are to look into the hourly candles. Obviously, previous hourly candle closed with no wick on the bottom, signifying that, you know what, maybe the volume on the downside could be dying. And this candle closed bearish, or actually closed dodgy with a long top wick, with a long bottom wick. And obviously, that could have been an early closing sort of a signal. Now, just looking at this structure, this stop loss could have been valid, but on the 2-hour time frame, 2-hour candle just closed. So what does that tell me? That tells me that, you know what, the current fresh 2-hour candle actually has higher chance of retracing up before moving down. So this in other hand is another signal for a risk management, definitely. So after a 2-hour candle close, I would wait for this 2-hour candle to kind of retrace and then enter later. So what I can do is, because I don't know how much deep is this 2-hour candle going to retrace, I can actually close the position. For example, I'm going to close the position and I'm going to let the 2-hour candle breathe. Now, on the visualization of the 2-hour candle, it's going to be so simple. So let's just stick to 2-hour candle, right? Yep. Now look at this. At this point in time, 2-hour candle has made its high, and that high is so close to the previously broken 2-hour support. Now, on the flip of this 2-hour candle, it's going to be way better taking a sell, because that way we know exactly where to place the stop loss. Now, obviously, on a smaller time frame, on a 1-hour time frame, it's so close to the previous 1-hour candle's high. So taking a sell, taking a sell here was not a good idea. That was an early sell, especially when a 2-hour candle was in about its close. Now look at this. Let the candle progress. Yep. Candle has to flip bearish. Now, let's see. Now the candle's starting to flip bearish at this point in time. Now from about the flip of the candle, the stop loss is going to be in about 13 to 14 pips, anticipating the price to move down, fuel the wick, and eventually move all the way down to the bottom of the range. That could be a possible entry right there. Now, let's see, look at this. Ranging. All right, now, 30-minute out of the 2-hour candle close, candles are ranging side by side. Obviously, 15-minute, 30-minute candle ranging side by side. So for the candles to push down, it has to make a resistance, right? Now, candles have been resisting off of this area on a 2-hour time frame visualization. This 2-hour candle has made its high, made its wick. So it's actually possible for the candles to push down. Pretty easy. So let's see. On the flip of the candle, that's going to be my selling point right there. Not yet. Not yet. All right, now look at this. The candles are starting to flip. Candles starting to flip bearish, right? Candles starting to flip bearish on a 15-minute time frame. Candles are ranging side by side. So on a 15-minute sort of perspective, I would only take a sell below this area, below that area, but the range on the downside will be less and less. On a 30-minute time frame, look at this. Price has been resisting that level, and especially on a 2-hour time frame visualization, it kind of makes sense to take a sell. Kind of makes sense to take a sell here with visible stop loss, 12 pips stop loss, regular pip stop loss, and anticipating the price to push down. So let's see what's going to happen, right? All right, now this is the point where I'm going to take a sell, just by visualizing 2-hour candles, right? Let's see what's going to happen. Anticipating the price to push down. Obviously a Friday trade. So let's see how it's going to work out here. At this point in time, candles are breathing. Candles are breathing and pushing in the original direction. Now at this point in time, look at the way the higher time frame works, right? Now this is something important. Did you see how the visualization of the 2-hour candle was so powerful? Now that's another thing. For example, the higher time frame candles alongside with volume. Obviously, this is New York session right now. This is New York session, and the higher time frame visualization where the candles move in a certain direction before moving in its original direction. That is a really important idea. Now, this 2-hour candle only moved down after grabbing its liquidity on the top, after retesting the previously broken support. So it was so clear. On a 1-hour time frame, I mean, we didn't even know what the candle was doing. It was ranging side by side. On a 30-minute time frame, it was ranging side by side. So what was to be believed? Maybe a 2-hour candle, which was still keeping a bearish posture, was something to keep in mind. And this trade is in about 11 pips in profit. I want to see how much of a drop is it going to experience. I just want to see that. Let's see what's going to happen. How much of a drop is it going to experience? If the candles are to drop, man, it's no wonder. It's no wonder, because waiting for the higher candles to flip in a direction, it takes a lot of time. It takes a lot of build up, a lot of orders. So let's see what's going to happen. And it's retracing pretty hard at this point in time. Friday, Freaky Friday. 17th of August. And the previous 2-hour candle actually closed bullish now. It's only funny now. It's only funny because the previous 2-hour candle actually closed actually broke the previous candle's low, retested the previously broken support, obviously tapping off of this support now, acting off of this support. So obviously when candles presented in about 19, 18 pips of profit, that could have been a possible idea or possible spot to secure. So I actually wanted to see how much of a push was this candle going to experience. In real life, if I was in this position, obviously I would secure in about 15, 16 pips, and I wouldn't care for the market to drop, because that's what we've been doing, right, in the live stream every time. Now, if I was to hold this trade like just what I did, now I was stopped out. Now, that's not good. That's not good at all. So what was the best idea? The best idea was to secure once the trade was in about 15, 16 pips in profit. So Moti Jar on YouTube says, what software is this? How to use the software? You have to first download it and use it in your MetaTrader. But you have to read the instruction file and see if the free software works in your MT4. All right, so watch this. So when the trade was presenting high number of pips right around here, around 18, 19 pips, maybe that was your securing point. Securing point right there. Beautiful. Beautiful session. Beautiful. So we actually talked about several ideas here, several important ideas. We talked about back testing. We talked about price action after breaking a range. We talked about volume side by side. We talked about how can we approach a missed trade, especially for example when live trading. When live trading, we miss a trade, but we cannot feel FOMO and enter at the very end. So that was a good that was some of the good ideas we discussed around here. So we always have to wait for our candles to give us confirmation, and obviously higher candle visualization was some of the important topics we talked about and viewed properly. So this software is actually kind of helpful, and I know there are some of the free backtesting simulating software. So just search FX simulation software. It's going to help you. It's definitely going to help you. So that was nice. That was actually nice. Pretty good. And we're going to do one last date and see what's going to happen, right? So it's the... So what date do we do here? 17. We did the 17. So we're going to do the 28 of August. 28 of August. Let's see. 28 of August. 28 of August. All right, let's see. 28 of August. The 28th of August is a Tuesday right here. This is when the markets started pushing up after. So this is another important idea we talked about, right? So we talked about how higher institutions or the large banks enter. So this was a possible entry. This was a possible entry for the institution to possibly place their trades and enter. And this is a nice spot to exit or give that relief sort of a rally. How is this a relief rally? Look at this. That was the ultimate target from the left-hand side, that demand area, on a weekly time frame. This was a weekly demand area that the price is bouncing off of. This is so simple. Anybody can tell. Anybody can tell that this is the weekly support. And weekly support is going to act as a demand area. That's where the price has deflated or price has gone down significantly. Now, a lot of big banks, big institutions enter around that time. That is the time when they enter. Now, when they enter, that's going to be the point where the trend can actually change. That could be the time, right? Now, what I'm going to do is I'm going to forward the chart to pre-New York. Oh, no, hold on. 28 pre-New York. All right, now look at this. Let's go with the weekly time frame. Weekly time frame pretty bullish at this point in time. So daily time frame is also bullish. Previous daily candle close bullish with the wick from the bottom. It's a Tuesday, so the bias is going to be same as the daily candle. And obviously now look at this. If I have to draw a recent resistance, this is a resistance area where the price is actually above right now. Right now, what I can do is I can clone this area from the 4-hour time frame. If the price is to push up, it has to kind of respect that area. Has to respect that area. Now, looking at the 2-hour time frame, what I can see is clearly, if I want to take a buy, I have to take candles closing above 143.375 at least. So that's going to be my bias looking at the 2-hour time frame. And looking at the 1-hour time frame is ranging side by side. So what I want to see is candle closing above this area for a buy. That's going to be my easy bias here. Easy bias. And for sell, well, let's see. For a possible sell, I have to see candles closing below at least this level. That way I can take sell. Let's see. Now what I'm going to do is I'm going to forward the chart, fast forward. Are still respecting that level. Hourly candle is doing this. Look at this. Hourly candle is doing something like this. Dun, 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 dun. So I have to wait for this to happen, and that way buys above 143.375 does look nice. Let's see. Still rangy, fast forward. Now we are slowly getting closer to 143.376, 375 at this point in time. So let's see how the candles are going to close here. Yep, looks like it's breaking the high. So I have to see candles close above at least. If an hourly candle closes above 143.375. Oh, look at this. Our hourly candle close above 143.375. Right now, visualizing the hourly candle alone. If the next candle makes a low before pushing up, I'm gonna take an entry on the break of the high. So let's see how the candles are gonna move here. An entry on the break of the high. So what I'm going to do is I'm actually going to place a pending, because we don't have a high impact news, do we? No, no high impact news. So the stop loss is below the current candle. So anticipating a push up here on the break of the high. Let's see what's going to happen. Fast forward. And it's coming back in the range because it's a pending order. It hasn't been activated yet. The deeper it goes and it moves up later, I mean, it's good. So it's coming back in the range. And all right, now this is the point where I'm in the trade, right? So the candle has made its low and it's starting to push up at this point in time. So the hourly visualization is working. It's kind of working, right? So let's see what's going to happen. I'm in the trade. So the stop loss should be actually below the candle's low. But let's see if there's enough volume. It shouldn't retrace. So anticipating a volume, and we're going to secure it once we hit that 10 pips a profit here. All right, in about 8 pips in profit. 11, right? So now look at this. We are 11 pips in profit. Now this is also one of the positions I take most of the times. So this was also a simple range sort of idea. Look at this. Price in pound yen was ranging side by side. This was the first candle that closed outside the range. And the next candle, look at this. Next candle made its low before moving up on the break of the high. That was the entry point right there on the break of the high. So that was the entry point right there. And the trade worked. So what I'm going to do is I'm going to close 50% right here. Close 50%. And let the trade run. Let's see what's going to happen. So let's see. And it's pushing up. Now, it's at this point in time, it's retracing back to my entry point. So I'm going to close the whole position right here. Close the whole position. Now, I don't care at this point in time because I've secured my bits of profit, right? Now, let's see. And the price is coming back in the range. That's why. So look at this. So another important idea for beginner traders. Now, some of the beginner traders, they wouldn't understand this idea. But look at this. Why is securing important? So you have to set yourself a benchmark that, you know what? Once the trade hits certain amount of pips, you secure or you manage your trade right after that. Because we took an entry around here. Sometimes market do offer you that 10 to 12, 13, 14 pips of profit. But if you don't secure, the market's going to take away the money from you if you don't manage your trade, if you don't secure. So what we did was we took an entry, but we actually certainly secured once we hit that 11 pips. So that's at least something in our bag. Now, once we identified that, you know what? I took a trade and I believe that trade can work. But I also believe the trade cannot work and move in the opposite direction. So if the candle is to move in opposite direction, I'm going to close the trade once it starts going closer to my entry point. So that's what we did. We closed the position. If you look back into the stream, the video, the entry was closed. Why? Because we believe in trade management, not risking our positions. So the whole position, so half of the position was secured earlier on. And obviously, rest of the position was closed at break-even sort of a situation. If we hadn't closed the position, beginner traders, that's what they do. That's the basic mistake they do. They let the trade run with full risk and they don't even secure. That's why you got to secure something in the market at least. So that was good, man. That was good. That was actually good. So that's what you got to do. So that was a beautiful, beautiful backtesting session here. So we did talk about different ideas at the beginning. Obviously, we were not that smooth because I was obviously checking the YouTube system if it was up and running. But we will be doing this sort of backtesting sort of a session several times now, probably every week. Probably every week. So backtesting session every week. But obviously, if you guys keep on posting your questions in the videos, if you send me DMs on Instagram asking me specific question, I can definitely address that. But on the other hand, that was a really good session. We started this session within about $5,375 and traded a total of 5 to 6 sessions. And ended up with in about $5,424, so which is still pretty good. That was pretty good. Palin says, Anuj, what is this backtesting software called? This software is called Forex. Oh, Forex. That's the name of the software. So thank you very much for coming in, and we will obviously talk, and we'll come back tomorrow doing live New York session stream. And until then, take it easy. Have a beautiful time. I'll see you guys next time. If you have questions, just put your questions. Just put your questions in the video and we'll answer your questions. Okay, just answering your questions. Need your questions. So obviously, have a beautiful time, guys. I will see you guys next time.